the IPOs. Shreya joining us here on the broadcast. Shreya, let's talk about the primary market action, the IPOs, and they picked up some momentum towards the end of the year. And you've been tracking IPOs here for us at News9. Run us through what were the top IPOs of the year.
So 2023 has been the year of IPOs, with this year seeing the fourth highest listing of the numbers of IPOs that have come. 2023 saw 58 mainboard IPOs with 176 small and medium issuance. With a number of 176 number of medium and small numbers of issuance. Along with this, interestingly, the data also shows that an EY report shows that India emerged as a global leader in the number of IPOs that were listed in 2020-23. Along with this, in December alone, 12 companies that got listed in December raised around rupees 8,900 crore, which was the second best in 2 years. Now, interestingly, what the data shows here is that in 2020-23, the IPO size fell by 17% as against 2022. However, what we could see here is that the issue size was smaller, but the returns that were posted was tremendous. In 2020-23, 40% gains were posted as opposed to a 29% loss in 2020-22. Now, when we look at the IPOs that have flooded in 2020-23, some of them which have created a frenzy has been Tata Technologies, Erda, Moti Sons Jewelers, DOMS India, which have made waves in the Indian market. Now, small size issues were among the highest demand, with at least were in the highest demand, with Plaza Wires being subscribed over 160 times, as well as Moti Sons Jewelers being subscribed over 150 times. When we look at large issue sizes like Tata Technologies, which was subscribed over 70 times, followed by Erda and GSW Infrastructure. Now, when we look at the number of gains that were posted and the returns that were given by these IPOs, Erda Technologies posted over 200% returns.
Wow.
As well as there were 5 other IPOs which posted over 100% returns.
Okay.
Now, out of the 58 mainboard IPOs which were released, 4 IPOs were subscribed over 100 times, which were Erda gave a 218% return, as well as Sai and DLM, which gave a 152% return. Tata Tech, which was among the most popular IPOs that there was, it gave a 140% return from the issue price.
And Mr. Baliga, certainly a year for the IPOs, but of all the IPOs that our colleague Shreya mentioned, which one do you think, or at least, if you think there are more than one, that can be, long-term wealth creators?
In fact, I've not really looked at it very closely. So for me to tell you as to which are the ones which will really give you long-term wealth creation opportunities, I could be the wrong person. But then what I would like to say is most of these IPOs have given you that opportunity of that bump up on listing. And I think most of the people who have been applying for the IPOs have been looking for that bump up to sell, because what we have seen this time is one after the other, most of the IPOs have given you that 50% sort of return or 100% sort of a return, or maybe more. And this also puts a question mark as to how could the merchant bankers go so wrong? Because typically they try to give the best sort of deal to the company coming out with an IPO, and here we are seeing even something like a IRIDA. You had the issue at 32, it opened at about 64, 65 levels, and then you see doubling from there. So 4x in a month. That's beyond imagination. So, surely there's something wrong. I don't think one should really be holding on to those IPOs which have given you 3x and 4x. I think it's quite prudent to book out as soon as you get this sort of returns.
And sir, as you rightly pointed out, it looks like at least the market is taking some sort of cognizance of these high IPO valuations, because this year we had more number of IPOs, but the ticket size was smaller. Now, from what I believe, I think SEBI is also working on the framework regarding valuations. But what's the way out? How can investors assess these IPOs, and how can they compare the valuations vis-a-vis other listed peers?
See, if you I don't think anyone really looks at the DRHP. I would say 99% of the IPO investors are not even looking at DRHP or any of the other documents which are available. Because most of the people are looking at what is the gray market premium based on that, and at the same time looking at the sort of number of times oversubscribed to invest in these IPOs, because they are not really looking at long term. I mean, they know that it will open, say, 25% higher or 50% higher, and they're just looking at that bump up. But then, if you're really seriously looking at these IPOs, I would suggest that, I mean, one should look at the ones which have corrected decently well from the higher levels. I mean, you look at the performance. Performance. When I talk of performance, I'm talking of the financial data. You look at the promoters. You look at the sector, and in case it, I mean, seems cheaper than the rest of the stocks which are quoting in that sector, could be a good time to buy.